House Republicans, with the support of President Trump, are pushing forward with their tax reform proposal, pledging to simplify the tax code and erase some popular tax deductions.
But several amendments have already been added this week, and states are now taking a closer look at how this plan will affect them. Joining us is certified financial planner David Rae of financialplannerla.com. Good morning.
Good morning.
Good to see you. So this plan in its current form calls for the elimination of the deduction for state and local taxes. So how would that impact California and other states?
It's going to get more expensive to live here in California. I love living
here. It's not
possible.
Right.
They're going to find a way. So basically, California has the highest income tax rate in the country right now, as high as 13.3% if you make a really good income. So that means you might be paying 13.3% to the state, and you can deduct that from your federal taxes, which makes it a little more palatable, but they're going to take that deduction away. So if you made $100,000 a year, I think there's a lot of people watching in that range, it's probably going to cost you about $2,000 more per year, just this one little change, losing that state deduction. The more you make, the bigger it's going to cost you. And you know, we're already paying a lot for taxes at the state, the federal, and just living here is expensive.
And what about property taxes? Is that affected in any way?
Yeah, they're going to put a cap on your property taxes at $10,000 of what you can deduct. And I know a lot of people go, what does that mean? It means if your house is worth $800,000 or more, give or take, depending on exactly where you live in California, you're going to have your deduction reduced. So that's going to make your house more expensive. You already live there. You're already paying these taxes. I know $800,000 in America, it's a pretty expensive house, but here in LA City, that really doesn't go very far. That's probably a nice condo or somewhere in the suburbs.
Okay, this plan would also repeal the alternative minimum tax. And we've heard a lot about how President Trump may have benefited from this in the past. Maybe a lot of Americans don't know what this is exactly. Yeah. Tell us.
People have no idea what the alternative minimum tax is unless they've been hit with it. And even then, they just know, oh my gosh, I've got this huge tax bill this year versus last year. It was set up in the 1960s because there was a bunch of people making $200,000 a year in the 60s, which is about $1.3 million now. And they were finding that these people were paying no taxes. They were able to deduct so many things. They paid $0 in taxes while they were relatively rich. So they put in the alternative minimum tax, which puts a minimum tax of 26 to 28% on your income. So, you know, if you don't get hit with this, you might be able to pay 10, 15%. All of a sudden, you're getting hit with 28% on a large income above $200,000. So it's $20, $30, $40, $50,000 bill for a lot of people. So taking that away can be a good thing for a lot of Californians, but it's really going to benefit the richer people. As you mentioned, Trump, we assume, has taken this, or we believe he's taken it. He hasn't released his returns, which I'm a money nerd. I'd love to look at those. I would be salivating to look at those. But all the same, it's going to help some rich people, but it's going to bring in less money for the government.
Let's talk about child adoptions, and we're talking about tax credits, adoptions, disability for retirees.
So right now, you can get a tax credit if you adopt a child. It's over $13,000 in a tax credit. And a tax credit is much better than a deduction because it's a dollar-for-dollar reduction of your tax bill. So if you adopt a kid, you get a $13,000 credit, which means you pay $13,000 less in taxes. They're going to take that away. And I don't think people realize how expensive it is to adopt a child. If you go through an agency, it's 40, 50, 60,000. I think a lot of people talk about it being cheap because it's less than in vitro or other things, other ways of having children that's not natural, or it isn't as much fun as going out and doing it. That's going to go away, and that's going to be a big problem for people that want to adopt children. And again, living here in LA, kids are expensive, and we kind of need that money. We also talk about things like medical deductions. Those are going to go away. Right now, if you have parents who are older, potentially going to a long-term care facility, this could be the difference between them staying in the facility or needing to come live on your couch. So I don't really want my parents living on my couch. I love them, but I much prefer they're able to stay and get the care they need. I don't have the skills to do it. So, you know, this can be a big difference. And again, if you're having high medical expenses like a major disease, you're spending a lot of money, and this deduction could be thousands and thousands of dollars, but you know, it's going to cost you more.
And finally, the proposal to permanently lower the corporate tax rate to 20%. So how can this stimulate job growth and wages?
So the thoughts are that this is going to trickle down, that if they lower taxes on the corporations, they're going to spend that money, they're going to pay people more, they're going to hire more people. We saw Reagan try and do this in the 80s, and I don't know. I don't really see too many people that got these amazing jobs. It seemed like the money went to the corporate shareholders, and it went to the people at the top. So they ended up making more money. And it doesn't just trickle down. They ended up growing the deficit, which meant Reagan, people forget this, had to raise taxes later in his term. So we may see tax raises in the future on this. And the government really says, and they really say that we have the highest tax rate in the world, which on paper, 35% is the highest tax rate in the world for the most part. But how many corporations do you really know that are paying that? You hear about all these major corporations that are doing all kinds of things to get that much lower, and they're paying people like me and attorneys to make sure they pay the least amount possible. So.
All right. For more information about these tips and David Rae, go to financialplannerla.com. You can also sign up there to get a free copy of his book, 10 Big Tips to Get Your Financial House in Order.
Thank you, David.
Thank you.